Hey guys, Killstokes here. Welcome back to another edition of the Trading Edge video. I apologize if the voice is a little bit raspy. Early in the morning, trying to record this before the very important Everton match, and I bit my tongue pretty badly yesterday, and I, didn't never realize how much your tongue impacts your voice, but not in the best of forms. I'm gonna try to muscle through this, but I do have a few new trading opportunities that I want to share with you. If you guys are brand new, I do this video each and every weekend, sharing with you some educational tips and the best trading opportunities that are on my radar for the week ahead. We're gonna start here on the pound dollar, and we've had a whole bunch of new members on the Tier 1 trading platform recently, so we've been doing a lot of I don't want to call it remedial trading, but back to the basics training in our live rooms. And that all starts with my 4-step process on how to analyze the markets. IPDE, identify, predict, decide, execute. I know a lot of you guys don't like following routines or a structured way of trading, no pun intended, but I promise you, if you follow this 4-step process or create whatever 4-step process or how many ever step process you want, it's going to do wonders with the consistency in your trading, because you're going to see the charts the same way. You're going to find the same opportunities, and consistent analysis plus consistent execution equal consistent results. And that's what we want as traders. So the first thing that I want to do is I want to identify what price action has been doing. And you can see that here in the pound dollar daily. We ended the week with a break and close below our most recent level of structure, right? We broke down from that 124 even handle and ended up closing below our previous level of structure looking left. So since we have that break and close below structure, then that allows me to go to the next step, which is predict, and it allows me to predict a potential move to the downside. So I know at this point I'm looking for a bearish move, a bearish move, a bearish move. The next question I want to ask myself is, okay, Akil, if we're going to go bearish, then where are we likely to go bearish to? And what I want to do is I want to identify my next level of structure, which is going to be right down here. Now, identifying structure does take practice. So I know a lot of you guys are like, why'd you draw that box there and not there and not here and not there? That's the part you got to practice, right? I gave you an easy 4-step process to follow. That part you can kind of just plug and play as far as reading the ebbs and flows of price action, identifying trend, identifying structure. Nothing beats practice time on the charts, and you got to make sure you're practicing the right way. If not, you're just going to form bad habits. But trust me when I say this is the next level of structure that I would anticipate price going to. And then we can build some confluence if we want. We can bring in, let's say, a Fibonacci retracement from our swing low to our swing high of this move. You can see we have what? A 786 Fibonacci retracement right in there. Let's also take a Fibonacci extension from our last move down. So our swing high right here to our swing low before this little bit of consolidation and back up. Look at that, a 1618 Fibonacci retracement right on that 786. And then we have an even handled number as well. So a psychological number at $1.22. So everything lining up, not everything, but a lot of things lining up in this area. This will be the next level in which I predict price is likely to go to. And now I can use that information to set up my trade. If I am a continuation trader, then I'm looking for a continuation down to this level. Either we go straight down, or maybe we do a little bit of a retest and then go down. Whatever we do, or whatever fits your fancy as far as executing trades, this is the move you're looking to get to take advantage of. If you're a counter trend trader, then you're just waiting, right? You don't really care about the move down, but you know that, hey, if price does get to this level, then this is the next level that you're looking for a potential hold and a little bit of relief back to the upside. So it doesn't matter what type of trader you are, trend continuation, counter trend, both, analysis is key to both parties. Next up, we're going to go to the Loonie, the Dollar Canada 4-hour. The Loonie was one of the pairs that did me good this past week. The last 2 weeks were pretty rough for me. Not pretty rough, but in a drawdown. This past week was a good one, so got me back on track, which I'm happy about. And yes, if you guys are new, guess what? Traders do take losses. Real traders take losses. People that do videos on YouTube take losses. You probably never hear about them, but yes, we go through drawdowns too in the last few weeks. I don't think I gave you guys a trading edge in the last few weeks, but the last few weeks have been a little bit rough for me as I've been in a little bit of a drawdown, but again, good to see things hit home. And we got another one setting up. We have two things setting up here on Dollar Canada, I should say. I guess we should start with the potential advanced pattern formation. So actually, no, we're going to start with the head and shoulders. So First, we have a classic reversal pattern in the market called a head and shoulders. If we look at the daily real quick and just look where price is at, you can see that price has come to a previous level of structure. Look left, structure leaves clues. We just came off a directional move, right? Price moving up. And a head and shoulders pattern is a classic reversal pattern where we start to see kind of the loss of momentum in said directional move. So price does something like this. We have this directional move, directional move, directional move. Everything looks like it's moving in the form of a normal trend. However, our head in this case comes to the previous level of structure looking left. We end up getting a deeper retracement, which is a clue for a potential slowing trend, whatever you want to call it, early Sunday morning, forgive me. And then we have the failed extension here, which gives us the right shoulders, right? Typically in the trend, we'll see a continuation higher. This one doesn't even come to the previous highs right here. And then to confirm the head and shoulders, we need a break of the neckline. Now the neckline is interesting. It can be two ways, right? If you are a trend line user, this neckline is going to be slanted, just like you see right here. So we actually already had the violation of this head and shoulders, which means it is complete. Or if you're a horizontal support and resistance trader, this is how I am personally, we did not have a violation, as we would need to violate this pink line right there. So one isn't better than the other. It's all personal preference. Like I said earlier, though, it is better that you are consistent with it. So if you're going to use horizontal all the time. If you're going to use slanted all the time. You don't want to go back and forth, because then you're just going to start doing what you want. No consistent analysis, no consistent execution, no consistent results. So we would expect a bearish move from this head and shoulders and move down to our previous level of structure right there. We also have an advanced pattern formation setting up as well. That's going to be called a Cypher pattern, if I get my charts pinging the right way. I'll just keep it quick for you guys so this doesn't turn into a super long video and I don't miss the match. But we're looking at a pattern that looks like this. We're looking at a starting point here. This first move up is my X to A. This first retracement is my A to B. This extension right here is going to be my B to C. And if price were to come down to my 786, that would be my D completion, and the zone that I'd be looking to take my Cypher is going to be right in there. I shouldn't put money signs, because who knows if this is going to win or not. Maybe big-eyed signs. Ooh, Cypher, right in there. So that's going to be a bullish Cypher, meaning if price gets to this level or in this zone, you're looking for buys at this area. Just like we mentioned before, this area is the same area in which you'd be looking for targets for that head and shoulders pattern as well. So again, no bullish analysis, no bearish analysis, just analysis, and then you got to decide what you want to use it for. I gave a good example of this in the live room that made a lot of sense if you don't understand that, right? You know, I think a lot of people think you have to analyze the markets in one way. If I'm a continuation trader, I must analyze the market this way. If I'm a counter trend trader, I must analyze the market this way. If I want to go bullish, I must analyze it that way. If I want to go bearish, I must analyze it this way. The truth is, you just analyze it, right? Analysis is a tool, and it's very similar to a hammer, right? A hammer is a tool, right? But in many cases, we see this hammer as only doing one thing. We see this hammer as, hey, I am just nailing in a nail, but a hammer can do something else as well, right? A hammer can remove a nail. So it's the same tool, but it can do two different things depending on how you decide to use it. Analysis is the same way. Doing analysis, good analysis, is the same tool, right? But how you use it now depends on your style. So in this case, if you're analyzing this level, maybe you're analyzing that predictive point as a place that you want to take targets until, or they take targets at. Or you're analyzing that point as a predictive point on where you want to get involved in the trade. And I think that's a very good concept to understand, because many traders come in thinking it has to be one or the other, or thinking that you have to do something different. Just get good at the skill of analysis, and you could be dangerous in so many ways. Just wanted to hammer that point home. Okay, next pair. So continuing on our theme of advanced pattern formations, pound New Zealand 4 hours can be short and quick. I didn't measure this out yet. This is all live analysis. I don't do anything beforehand, but it looks like a bat pattern. If I take my swing low to swing high right here, X to A, yep, we come down to our 50% retracement. So it's another advanced pattern formation. This one's going to be called a bat pattern, where this first swing is going to be my X to A, this first retracement, my A to B, this failed extension, my B to C. And now if price comes down to our 886, right, this zone right here, then that is going to be the point where I'm looking for buys here in the market. So pound New Zealand 4-hour, potential bullish bat pattern. Now, speaking of patterns, right? What's interesting about patterns, I got this question the other day about switching trading styles depending on market conditions. And I thought it was a very bad idea because the thing is, we never know what the market condition is until it's already occurred. So the question was kind of like, hey, can I be a trend trader when the market is trending? And can I be a consolidation trader when the market is consolidating, or stop trend trading when the market is consolidating? And my answer was yes, you can. But the thing is, we don't know that the market is in a trend until it's already trending. And by the time you switch, the trend may be over and you miss it. We don't know that the market is in consolidation until the market is already consolidating. And by the time you switch to take advantage of that consolidation, you may miss it. So in my personal experience of trying this out myself and working with many, many traders who have tried this, you're always going to be a step behind. Your better bet is just to diversify your trading portfolio, your strategy portfolio, where you have different strategies that take advantage of different market conditions. So instead of trying to switch from one to the other, you have a strategy that takes advantage of trending scenarios. So when those signals come, you're in it right away instead of waiting for the switch. When you have periods of consolidation, you have a strategy that takes advantage of that as well. And I think that's the best way to kind of make a balanced portfolio. And in consolidation, one of the best strategies you can have are advanced pattern formations. I'll give you a great example here because you're going to see that here on the Euro Canada 4-hour, we're going to have multiple advanced pattern formations within this kind of smaller to bigger period of consolidation. I'll kind of start with the smallest one and work our way out. I hope my eyes are seeing this right. Okay, so if we go down to the hourly here, we're looking at a potential bat pattern. Let's see this. Yep, 50% retracement. Looking at a potential bat pattern. So I'll draw this one first. This is going to be an X to A, swing high or swing low to swing high, A to B right here, B to C, and then a CD completion right at this 886. If I bounce out to a 4-hour, right, we're going to see another advanced pattern formation. This one looks to be a Gartley, right? We're going to take our Fibonacci extension from swing high to swing low just so I can measure out my completion point. Boom, there we go. And we're looking at an advanced pattern formation that looks like this. X to A to B, B to C, and then a CD completion right down here at that 127. I'll go ahead and make this a different color so it stands out a little bit. There we go. And then if I zoom out one more time, I want to celebrate, yeah. Whew, sorry. Let's let's look at this as well. I think we have another Gartley pattern here. Let me just measure this out and see what we hit. Yep, we do not hit our 786, so we're going to have an even bigger Gartley pattern that is going to look like, give me a second, just going to get these ratios right. Boom. We're going to look like this. We're going to look like X to A to B, B to C, and then a CD completion down here. So you can see as the market goes into consolidation on these different levels, from the daily where we're going sideways to the 4-hour to the 1-hour, we have multiple pattern formations within that consolidation. So these things are very prevalent if you know what to look for and if you know when to look for them. You can see hourly small, 4-hour medium, daily large. So something for any type of trader. So before you go, you've probably been hearing a lot of talk about the Bitcoin halving. If you want to know more about that, I do have a Trading Coach podcast episode coming out tonight at 5 p.m. explaining what exactly it is and what investment opportunities it opens up. So make sure you check out the recent episode of the Trading Coach podcast. And while you're waiting, take the 10 episode challenge. Pick out 10 episodes from the past, give it a listen, see if it's something that is helpful for your trading. And if it is, make sure you make it a part of your regular routine. There are 3 new episodes each and every week. It is ranked one of the top trading podcasts out there. So check it out. And if you like it, leave me a rating and a review. All right. Until next time, plan your trade, trade your plan. Take care.